wonderful good day to you. This is Owen McCafferty again, speaking from the humble abode of Sawgrass Village Circle, where our offices are presently located. And we are going to comment today on that classic year-end consideration for bonuses. Bonuses for any business entity, in our opinion, are a failure, because what it means is you didn't pay people enough all during the course of the year, and now you want to make it up by paying them an amount of money. Of course, it's a one-time hit. It doesn't accumulate. It's not going to improve their economic well-being throughout the entire year, but it's a hit of cash after paying taxes, of course, that will be available to them for something fun. But is it really an effective means for improvement? Now, if you sit down with a person and say, I will pay you a fair amount throughout the entire year, or I will pay you an amount less than a fair amount, but you have a risk that if things don't go well, if the economy doesn't do well, if our practice doesn't do well, then we may not have bonuses. Or do you want to be paid fairly right from the start? Well, I think most people would definitely say, you know what? I want to be paid fairly for what I do, because quite frankly, you have control over my service to the practice. You can direct me in any way, shape, form, or fashion. If there's a failure on the part of the practice or diminishment in capacity, then that's your fault. That's not mine. You have all the authority and all of the control, and I do not. So I will tell you what. Take all of the authority and all of the control that you can statutorily in accordance with laws that are promulgated by the United States as well as our specific state or commonwealth, and pay me fairly. And I think that's the ultimate issue, to pay a person fairly and not to play games. And we could go around and tell stories about how companies hold out and the people desperately hang on for dear life until they get their bonus, and then all of a sudden they leave. And it's called departure season. And it follows pretty much to the award and the payment, satisfaction of indebtedness, to the employee for the bonus. And you can get on webcasts, websites, social media, and see just hundreds of thousands of examples of people saying, I can't do anything till I get paid the bonus. It kind of reminds me of that Chevy Chase movie, one of the many that I love. And in this movie, it was A Christmas Vacation. If you remember, old Chevy Chase was counting on the money so that he could build a new swimming pool for his family. Well, that's what the bonus is. It's a Christmas vacation. You get paid less, and then you're held victim to somebody who had control over everything that you were doing in the course of the year. And if they didn't have control over what you were doing, they had the authority to dismiss you. In many states, with the activity and the freedom to do so at will. That's known as being an at-will employee. So pay a person fairly. So that's the first message. Second message is, if you are a shareholder and an employee, generally a minority shareholder and an employee, and you are being paid a bonus and you are being paid a distribution, and of course in some entities such as the Subchapter S corporation, those distributions have to be pro rata. That is in relationship to the equity holding percentage that you have. So for example, if I'm going to distribute 100,000 and I own 10%, then I will receive 10,000, and all the other people that would receive the residual, the remainder, would be paid the 90,000. Statutorily, it has to occur that way. That is known as a distribution. Being a distribution, no income tax is withheld from it, no Social Security tax is withheld. Of course, statutes change from time to time, and if you look at your watch, I'm recording this on October 23rd, 2024. It could be in another year. If you're reviewing it then, there may be a law change. But presently, if you're involved in an entity, then you're not subject to the Obamacare tax of 3.8% on distributions. So what I am saying is that the other active income classification for you as a shareholder are most advantaged in distributions. The distributions have to be based on a return on investment. If you try to disguise compensation as a distribution, then there is a recharacterization that the Internal Revenue Service has in substance over form. And it's a good law because it says you can't be cheating people. If other people have to pay a tax in relationship to statute, you will have to also. You notice I didn't use the words fair share because the word fair is a 4-letter word. And I've yet to find anybody who's able to logically defend and define what fair share would be. It's just thrown about. And it's usually applicable to the other person, and that's to the person making the definition. So in terms of bonuses should be rare, infrequent, and you should be paying a person upfront on what they're worth because they don't have the authority, for the most part, to be that captain of their ship, master of their fate. The employer is, and the employer is telling them what to do. Second issue, on distributions for minority shareholders. If you have minority shareholders, they will be receiving compensation. Now, that could be in wages, if it's fairly assessed with no bonus, or if the employer made a horrible mistake and underpaid you, then there would be a bonus, but only in those rare circumstances. And then finally, distributions. If you have an equity holding based on profits and there is cash available for distributions in a Subchapter S corporation, those distributions have to be pro rata and they have to be reasonable in relationship to the economic status of what actually occurred. You can't disguise compensation in the form of distributions. Well, these are just some thoughts. Again, trying to keep it under 8 minutes. And all I would like to say is on behalf of Professional Fusion, which has been so kind as to sponsor this channel, I would say adieu.